In this video, I'm going to show you how I invest. I'm going to take years of professional experience, exams, and practical experience investing in markets, condense it into 4 or 5 minutes that I think can help a lot of people. Crypto's down, the stock market's down, everyone is fearful at the moment, but this does not bother me in any way. I'm not affected by these price movements because I just have a long-term strategy to drip feed investments into the market, and these short-term recession fears, interest rate fears, they kind of fade into the background when you have a long-term strategy. Let's look at the prices right now. So it's been a bad week, right? We had a fake out and then a huge dump and sell-off. Now, we can look for reasons for this, but it's very, very clear, okay? The Fed has said, we are starting to withdraw our support for the market. You're on your own. So the market has many fears right now, and that is just what happens short term. But what are you in this market for? Are you in this market to try and trade short-term fear and uncertainty, what the Fed's doing, what interest rates doing every quarter, the results of companies, the results of the economy, or are you actually a long-term investor that just gains exposure to the best growth assets in the world? That's what I'm here for. So yeah, look, Bitcoin's had a very bad time of it, really being rejected off of this this downward resistance for what is seemingly forever. So every time we get a little rally or a consolidation up to this level, we're getting rejected off of it and another move down. So this is obviously a classic downtrend that we're seeing now, really the complete opposite to what we're seeing with the classic uptrend here, which is an uptrend. Every time the price comes to support, it bounces to the upside. So this is when the Fed's pouring in money, and this is when the Fed is taking out money. So are you an investor that tries to preempt what the Fed is going to do and what the market reacts to what the Fed is doing? Or do you have a long-term plan to get exposure to the best assets in any given space? Well, for me, the easier, more long-term option, especially for everyone who's not a professional investor and doesn't have 10 hours today to sit in front of screens, is to pick the best A1 assets in each individual category and then understand how much risk you want to expose yourself to. This is not investment advice, of course, and this 3 or 4 minutes right now is basically a condensed version of many of the things I talk about in my crypto investor course. If you want to check out the course, you want to actually know what crypto is, how to invest, how I invest anyway, and how I think about the market, I'll leave the link in the description. 150 videos, and I've just added portfolio updates and my trade alerts to the course as well, so you get that completely for free. I'll leave the link in the description. This is how I see things, right? So you have your income. And then a part of that is your costs, right? So you have your house, which is the biggest, or a rent or whatever. You have your car and other things that are very big. And then you have your general living costs, right? Now, this part right here is going to be money that really has no other use. Now, what I would say here is that with your living costs, right, there's a cash. This is cash. This is cash savings that you just leave aside for, you know, a rainy day, something happens, you break your leg, can't go to work, whatever. This right here is basically money that is completely left over and it's going to be rotting away in your bank account. And over 10, 15, 20 years, you're going to live that long, right? I hope so anyway. Then obviously this is going to be sitting in a bank account and you're not doing anything with it. Now, this may be a larger or a smaller percentage of your income, depending on who you are and how large your income is in relation to your costs. We're all different, but we have an amount here. So then we take this. This is our investment money, money that we can put aside that we literally have no other use for whatsoever. This money does not change our life in any way, okay? So our quality of life, the things that we do, our daily routine, this money is just rotting away in the account. So we may as well put it at risk, right, to start and actually earn some money over the long term and protect that money from inflation, which, trust me, is going to be here forever. It's either larger or smaller, but inflation happens unless you get some, you know, really terrible kind of economic factors. So we have this amount. Then of this, how much do you want to put at risk and how much do you not want to put at risk? You can put some of this in, you know, a very low risk savings account or bonds or something. I don't invest in bonds. Bonds are still losing money and will lose money. People are going towards either stocks or crypto. Crypto is very high risk. Stocks, you can have high risk stocks and low risk stocks. Maybe some of that you want to put into stocks, right? Different color. So this is, you know, let's say this is stocks and then you have this is crypto. Okay, so S and see. Hopefully you can see that. Now, all you have to do is take these parts and say, well, what do I want to invest in, right? What are the 5 or 10 names? Maybe you want 15 stocks that you invest in. You think, well, these are great. If you don't want to invest in stocks and you want to put it in crypto, that's good too. We can all choose how much as a percentage of each of these categories we can invest in. Here's crypto. So how many cryptos do you want to invest in? You know, let's say 5, 6, 7, whatever it is. You can do that. So you just choose what are the 6 names in, 5 to 6 names that you want to invest in. You just split that up into how much you want. I would say BTC is the lowest risk, so I'd probably put the most in there. And then you've got ETH. Why is ETH low risk? Because it's a massive network with multiple billions of dollars in the system, and it's being developed. It's the biggest, the most secure smart contracts chain. Then you have a few different ones, right? A few smaller cryptos that you might want to, take a bigger bet on, right? Or if you don't want to do that, then put less money in stocks and go towards an invention that has come about because of crypto that is one of the best investments that I've ever seen, which is a stable coin, right? So you have USDC or USDT like this. I wouldn't use USDT, but you can use USDC or UST, whatever, and you lend it out for 10 to 20%. Now, in this current market where the market is dipping, everyone's fearful, everyone's, what's going to happen? You've got your money in basically the US dollar, earning 10 to 20% income lent out. Are there risks to this? Yes, there are some risks, but you're not, let's pray you're not going to get some sort of liquidation event in USDC because it's backed by a $1-for-$1 anyway. And do rates increase and decrease? Yes, they do, but a 10 to 20% somewhat guaranteed income. The rates may fluctuate, but you're not going to get any principal fluctuation, right? So a dollar is a dollar, then do that. So this is how I would look at from an income perspective, taking away costs and everything, having this, moving it through to assets, right? Now I go through this a lot more, how to make these decisions in my crypto course. If you are interested, you want to see how I'm investing and everything like that, I would suggest that. I'll leave that in the description. But the one thing I would say is that the reason why I'm completely and utterly unaffected by price movements, off 30%, whatever, is because of the amount of money that you have at risk is completely not changing your outlook, because you have your costs and your cash savings for a rainy day and everything paid for over time. The amount that you put in the market is at risk for 10, 15 years. The best investors always have been ones that have held. People that day trade do not become wealthy. It is extremely unreliable as an income source. If you have a company that day trades as a service, you can make money. But the best investors, the richest people, are like Musk, Zuckerberg, the Amazon guy, can't remember his name. But these people, they have their stock and they just hold it for 10, 15 years, they become multi-billionaires. So what you have to do and understand is that you just choose the absolute best class, A1 class assets, and hold them over time. And you hold that through market cycles. That is what I think. That is what I think works for most people. This is not investment advice. And I go over this in much more specific detail in the course. But this is, for me, for most people that aren't working professionally in the industry, the best way is just to consistently go over time into the best A1 assets. Then after this strategy is put in place, it really is a matter of just being able to choose the best assets. And obviously that's a different part of research and everything like that. But if you choose those assets and you just slowly accumulate over time, I believe for most people, this is what you would say a dollar cost average long-term investment strategy. For the short term, the market is really looking towards 3 dates. The first one is January 25th. This is a Fed meeting. The next big meeting, though, is March 15th and 16th. This is when the Fed is expected to raise interest rates. This is already priced into the market. Okay? The market already knows they're raising rates, and so this has been priced in already, and we've seen this reshuffle in the markets. This is also not really a big event. Feb 10th is CPI, which is consumer inflation. Again, a massive read. But in my opinion, everything's negative right now, right? So if inflation comes out very, very hot, that's negative because the Fed will be looking to raise rates even harder into that. If CPI is low, or comes out low, it means that the economy potentially isn't growing, which also sparks fears of a recession. So everything's bad news. Everything's FUD and kind of FUD right now. Very fudding hell, right? So it's really bad. But look, this is just the short-term sentiment in the market that I just cannot let bother me when I invest, because it changes from one moment to the next. One meeting comes out and this happens and that happens and the market changes. But the market carries on. It's been here a lot longer than I've been investing, and it will be here when I've stopped investing, and when I'm gone, it will still be here. Long term is the only way that you can invest. And anyway, to be an investor, really, you need to be holding for 5-7 years at least, and that is at least what you should be classed as an investor. And then you will see out all of this cycle, and it will not be of interest to you. So the main point is that when you're looking at investments, what you're looking at is what are the best things to invest in? What are the companies with the best cash flows? And what are the cryptos with the most growth and user adoption? And everything else becomes complete noise. I hope that helps in some way. If you want to learn about this way more in depth, check out my crypto investor course, linked in the description. We have private Discord groups. I'm putting my trade alerts portfolio in there. All of my thoughts about what I'm doing over time is all in there as well. And the price is going up in February because of all the new content that's just been added. New content is added for free for existing users. Anyway, I hope that helps. I'm James with MoneyZG. Cheers for watching, and I'll see you in the next one.